Ladies and gentlemen, I welcome you all to the Q1FY26 post-earnings conference call of All Technologies Limited. Today on the call from the management we have with us Dr. Ajay Mia, Managing Director, Mr. Rajiv Tyagi, Executive Director, Ms. Ritu Sood, Executive Director, Mr. Sandeep Jain, Chief Financial Officer, and Mr. Sandeep Salman, Head Cloud and Managed Services. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements, which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to quickly run us through the presentation and the business and performance highlights for the quarter ended June 2025, the growth plan and vision for the coming year, post which we will open the floor for Q&A. Over to you, sir.
Thank you very much, Vinay. Good afternoon, everyone who has taken time to join us today. We will keep our presentation short, which gives us more time for conversation. Let me just share.
Sir, your presentation screen is not visible.
Yeah, I know. I am just going to. Is it visible now?
Yes.
Okay. All right. Thank you. So as usual, we will first go over the numbers. We'll talk about the story behind basically what's steady, and the annexures are for anyone to look at the details. Some of you might have already seen this presentation because it was uploaded several hours back. If you look at the numbers in Q1, we had a total revenue of 34.07 crores. The income from operations stood at 36.3. EBITDA was 8.79 crores. Net profit at 6.32 crores. Net profit margin 17.4%. This meant a Q-on-Q reduction in top line of 5.2%, though on the Y-on-Y basis, it was 3.8%. Our repeat plus recurring grew up this time to become 96.4%, and we added 11 customers. So that's the summary, but let's go into a little bit of detail. So on a Y-on-Y basis, income grew by 3.8%, EBIT grew by 4.7%, EBITDA margin was 24.2%, which meant a growth of 4.4%. The net profit growth was 2.3%, and the reported net profit margin was 17.4%. These are the charts which show Q-on-Q, Y-on-Y numbers for EBITDA, the revenue, EBITDA, and the PAT. So I think the numbers have been there since yesterday. And if you look at these numbers, it would appear that the momentum seems to have moderated this quarter. But in reality, perhaps the numbers do not reflect the underlying health of the business. Even though the broader market is clouded with uncertainties, our position as a specialized Microsoft Business Solutions and AI partner brings us unique perspectives and opportunities. This quarter saw us seed AI solutions with several customers. We had 2 significant deal wins against SAP and a sizable deal win in Saudi Arabia. As you might have tracked, Microsoft's momentum has significantly strengthened over this period of time, and particularly in the areas of cloud, AI, and business applications, it is leading the competition. So what all of this means for us is that the fundamentals of the business stay strong. Businesses worldwide are facing a paradigm shift yet again. And this paradigm shift is now triggered by AI. Alletec helps customers navigate through the maze and modernize their businesses. As we discussed, the Microsoft Stack adoption is strengthening and leading competition. The comprehensiveness of the solution offerings that we have, it continues to give us an edge. And our business model of being direct to end customers and of having project-based engagements brings us strength because we do not have dependency on a small number of large companies who might be looking to just outsource some work over to us. So there's direct customer engagement, direct customer relationships, and all that is going on in the world of technology and business are the fundamental strengths that we are leveraging and will continue to leverage over the next several years. If you look at this quarter, the primary revenue drivers have been that our UAE operation has gotten operationalized now. So we have a person running that operation, already a few leads that we are working on. We strengthened our Africa business with a new sales leader, who has been showing good spark. We just spoke of a sizable tender win that we had in Saudi Arabia for a large global services organization. This was a tough fought win. It took us almost like a year to get this. The traction in America continues to strengthen. Our own investments are underway in AI skilling and IP development. We will talk a little bit more about this. And we are also significantly increasing our marketing investments. There is a good amount of investment and effort that is going in AI transformation within the organization. This includes strengthening AI capabilities through internal skilling. We have been investing in building several AI agents, and I will try to give you a view of one such example that we have been under POC, and we have several agents under POC with customers to drive automation, enhance decision-making, and deliver measurable business outcomes. Modernization of industry solutions is asking for investments, and which we are making. We are embedding AI agents into our industry solutions, particularly the EPC 365, Travel 365, and the EdTech 365. We are working on AI adoption for our internal development and testing activities, which is enabling us to improve our cost. We may have costs increasing on account of some lateral hiring, some salary increases, but we are trying to optimize that by including AI efficiencies into our processes. Maybe I give you a little view to one of the agents that we currently have under POC. Raj, can I request you to please run the video?
Sure, sir.
Should I stop sharing?
Yes, sir.
Okay.
Meet Machine Maintenance AI Advisor by Alletec, your machine troubleshooting copilot agent. Let's understand what it does. The Maintenance Advisor is an intelligent copilot agent designed to streamline industrial maintenance troubleshooting by helping organizations in predictive and breakdown maintenance. The benefits include proactive maintenance, faster troubleshooting, historical context awareness, smart knowledge aggregation, OEM contact access, automated communication, improved response time, and centralized knowledge hub. Let's take a look at how Maintenance Advisor, powered by a Copilot agent, handles the real-time machine issues using our smart automation. Here's an email that was just received by a shift engineer from our Maintenance Advisor system. First, we see that an anomaly was detected in machine, MAX 001, specifically abnormal temperature spikes with values reaching up to 298.7 degrees Celsius. This is far above the safe threshold of 200 degrees Celsius. Copilot analyzed this anomaly and instantly performed 3 critical tasks. It consulted the machine manual and listed out potential causes such as a stuck relay, multifunctioning thermostat, PID loop misconfiguration, and much more. It also suggested clear troubleshooting steps like calibrating the thermostat, checking pump filters, testing relay logic with a multimeter. It didn't stop there. Using past work order data, it found a similar issue logged by technician Suresh Varma on 9 June, 2025, where the thermostat sensor was replaced. This gives the team in context and avoids repeating work or wrong assumptions. Then it performed a live web search and provided URLs related to the same machine model, FryMaster Temp 600, giving you access to known resolutions and other user cases. It also included the manufacturer contact details in case further support is needed. Now we are inside Business Central, and here's the real magic. Since Maintenance Advisor is integrated with Business Central, Maintenance Advisor has already created a work order in Business Central with an ID 00026 based on this anomaly. Let's search for the work order generated for this anomaly. This work order was automatically created by a Copilot agent based on the breakdown email. This means the technician don't need to investigate from scratch. Everything they need is pre-diagnosed and structured and sent over the mail. Now, I'll just quickly give you an overview where the machine data is getting stored and anomaly is getting detected. This is the detection page where the data of all the machines is getting stored. Once the anomaly is detected within this data, the anomaly flag is checked. So what just happened? Anomaly was detected in real time. Work order was automatically created in Business Central. Email was generated with detailed diagnostics. Copilot read the mail, extracted the issue. All related data, past issues, manual references, tools, resolutions, were linked to the record. All of this done autonomously. With Maintenance Advisor, you don't just get alerts, you get intelligent actions seamlessly integrated with Business Central or other solutions and apps, backed by Copilot agents. This is the power of Maintenance Advisor: predictive, preventive, and proactive. It's not just maintenance, it's intelligent intervention. Thank you for watching, and welcome to the next generation of machine maintenance.
Thank you, Raj. I know the video was probably not that clearly visible to some because of the nuances of screen sharing, but the link is available in the presentation deck that has been uploaded. Anyone can click it if you have interest in watching what was going on. So let me continue with the few remaining slides of the presentation. So by the way, this video that you saw, this is an AI agent that we created from the tool set and technology stack from Microsoft. In a similar manner, we have created several other agents which are either specific to an activity or specific to an industry. And these are currently under POC with a set of customers. The face of ERPs, the way the solutions are built and the way the solutions will get consumed, also the way they will get implemented, will change quickly over the next 1 to 3 years. And we at Alletec are fully geared up for it. This not only requires people to understand the new product lines and the new technology and the new stack, it also requires to understand the new way of implementing these solutions. So we are taking steps to stay in a leadership position there, and we will see these things happening definitely by the end of this year. If you look at the geographic spread, it's not shared. Okay. Right. If you look at the geographic spread from a services point of view, Americas accounted for 58.9% of the revenue. India was at 24.4%, Europe at 5%, Africa at 4.8%, APAC excluding India was 3.6%, and Middle East was 3.3%. And as we have just discussed, we have taken several steps to increase these numbers, and we will see that effect coming in a couple of quarters. As we mentioned, we added 11 customers. 4 of these were domestic and 7 were international. The revenue from our top 5 in this quarter was 22% and top 10 was 32.3%. This is the split up of revenue from different industries. Some industries have been kind of broken up in the sense that food and beverages can be a part of manufacturing as well as part of distribution, but we have called it out separately. So professional services remains the highest, followed by manufacturing. And retail, as you see, is taking a significant percentage now. Our growth drivers stay, consistently the same, except that besides our comprehensiveness of our offerings, the Microsoft momentum is now largely led by AI. So that's the reason that I have written here now AI and the Microsoft momentum. AI momentum is growing and Microsoft is leading that race. The international focus stays. Our IP-led solutions continue to find us more opportunities, and our focus on inorganic growth stays. Very brief introduction for anyone who might be joining this call for the first time. This is a brief of Alletec. I won't spend time on this, but most of the data about us is here. What we do and how long we have been doing it, how many customers we have is all filled in here. Our board of directors remains the same. Our lead management stays the same. These are the standard annexures and something about our CSR. So if you're okay, I can stop sharing.
Yes, sir.
Okay.
So we'll
Those
move
are-
to Q&A. Yeah, Raj, take the Q&A.
Those who request to ask a question may raise their hand or put your request in the chat box and we'll answer the question for you. I also request all participants to limit your questions to 2 before joining the queue again. We'll take the first question from Rohan Mehta. Rohan, you can unmute and ask.
Hello, sir. Am I audible?
Yes, Rohan, very much.
Perfect. Perfect. Thank you so much for the opportunity, sir. Couple of questions. So firstly, so the revenue has remained flat at about 34, 35 crores for the past 4 quarters. So I wanted to understand firstly, what is driving this stagnation? And also, is the deal execution sort of slowing down due to macro or client specific uncertainty? And while services, as we see, are currently excluded from Trump tariffs for now, has this also induced business transformation spends to be put on hold? So also, if you could share your outlook on the US market over the next few quarters, given that the revenue share has come down sharply in Q1, that would be great.
Sure. You see, I think US, nobody can predict next few quarters, given the current state that we have in US. I think people can't even correctly predict the next week, what will happen to various tariffs and what will happen to the international relations and so on. So while the IT and services in particular are not impacted by tariff, but the businesses overall are. So many businesses are cautious in terms of committing to investments which are long term. We have had several situations where companies have been uncertain about. So, for example, if there's a manufacturing unit somewhere in the US which is importing, some stuff from China or India or any other country for their manufacturing, they don't really know what will be the landed cost. And some of these things are stabilizing, becoming more clear, favorable or otherwise, but they are becoming more clear. But the last couple of quarters, this has been one impact. There are other factors as well. This may not be the only factor. There have been overall macroeconomic situations. But if you go under that, we actually don't see any, I would say, slowing down of demand. Some of the numbers that we see, all said and done, these are like, 1-2 crores here or there, kind of make the numbers look different from a percentage point of view. We have also been a little bit careful, I must admit, that we don't want to load a lot of manpower on the organization because we are seeing that AI is changing the way that we work. So we may be a little bit cautious about it. But fundamentally, I think people are trying to adjust and they are trying to understand how not just the global political and war situations are impacting businesses, but also how AI is impacting businesses. So this is a point where many factors are at play. Very difficult to kind of forecast what will actually happen when. But one thing is for sure, there is no reduction in demand. It's just that people are more cautious and maybe taking a little bit more time before they decide what they need to do next.
Okay.
We had, by the way, if you look at the last quarter, we had lesser number of customer ads and we had called it out in the last quarter. This quarter became healthier. And some of this will reflect in the coming, 1-2 quarters, 3 quarters. But that dip that we saw in customer ads, is becoming better.
Okay. Okay. And secondly, when it comes to the last quarter's EBITDA margins, were they temporarily higher due to a lower software license cost? And if so, where do you feel is a more sustainable margin profile you see going forward?
Sure.
And in terms of your FY26 guidance, is there any revision to the 20% revenue growth for FY26 that you would like to make?
Sure. So see, Q4 actually comes in with a set of adjustments. Over the year, you may have provisioned for some expenses. And when the year ends, some of those expenses might actually not have been incurred. So that is one factor. The other factor which comes in Q4 also is the Forex rate adjustments that happen. And all of these adjustments are put in the Q4. There might be some variations, and some of it could be deal on deal basis, where license margins could have been different. But fundamentally, there isn't anything I would say which is, I said the same thing in the last quarter, although we had a substantially higher profit margin. But I said that the most extraordinary thing is that everything has stayed ordinary. And we still have had, larger profit margins. This is just the nature of the business and the nature of how some of these expenses are accounted for. Well, the one little thing I would say, and I don't know how much weight is appropriate to put in that, we also had a little expense. We had our, 25th Foundation Day this year. And, so we had our annual celebration. That had a little bit expense, but we are not outrageous on making any such expenses fundamentally.
Sure, sir. Thank you so much. I'll get back in the queue for more questions.
Thank you.
Thank you. We'll take the next question from Raghav Singh. Raghav, you can unmute and ask.
Hi, sir. My question is related with the margin, which has come down as compared to March quarter. So that's my first question. Then I have one more question.
I think this first question I just answered, that the March quarter, which is the quarter 4 of a year, has invariably some adjustments going in. Very, very often there are expenses that you provision for as you move quarter to quarter, and sometimes if all of those expenses are not made, then they get adjusted. And then we have this Forex adjustment coming in, typically in quarter 4. So these two are the primary things which would give a positive flip to margins in quarter 4. Otherwise, if you compare Q1 to Q1, the margins are, even from a percentage point of view, I mean, from an absolute number point of view, it's higher, but from a percentage point of view, it's almost the same.
Okay, sir. Thank you. My second question is, when we say our client base has professional services, manufacturing, so what is this professional services? Is it the clients, their nature of services in its professional services?
Yes.
So is it like big IT organizations, or is it like some consulting organizations, maybe, I don't know, McKinsey or someone?
Rajiv, you want to answer that?
So it will be a mix, Raghav. There will be consulting organizations, there will be, let's say legal services companies, there will be companies in the marketing advertisement space. So there is a array of, services that people are offering. And if you see, even at a level, certain companies in the digital space, they may be actually providing a service where they may be charging, for that particular service and not a product per se.
So by the way, there could also be an IT organization where we are not working for that IT organization's customer, but we are working for that IT organization to help them put in place their internal systems.
Okay, I got it. Thank you. That's all from my side.
Thank you.
Thank you. We'll take the next question from Vikas Budania. Vikas.
Hi, good afternoon, sir.
Good afternoon, Vikas.
Sir, your presentation says that AI is bringing big changes. What are the main risks you face when you start focusing more on AI, both inside your company and when delivering work to clients?
See, the biggest change will be that we will need to recognize what the change is going to be. All the businesses who don't recognize what the change is going to be will be at risk. Now, if you see from our point of view, from our solution offerings point of view, if we fail to deliver the advantages of AI to our customers, they will move to somebody else. And if they don't, they will start losing on competition. So if we don't gear up and if we don't become an AI first company, which we are working towards, and if our solutions are not AI first, then we will start losing these opportunities. Because if we don't do it for our customers will start losing their market share and their opportunities. So these are the primary risks. I wouldn't say that work is in any sense coming down, but I would say it is changing. We need to recognize what that change is, and we need to leverage what that change is.
Okay, sir. Second question is, sir, can you provide an update on sizable tender win in Saudi Arabia and how it will impact our geographic revenue mix in the coming quarters?
Well, I wouldn't say, we say sizable, it was about $500,000. Okay, so it's not multi-million-dollar. Last quarter, I had reported having won a $3 million tender in Canada, but that was over a period of 3 years. This one is about $500,000. We should be completing this project engagement within 3 to 4 quarters. These are all milestone-based payments, so not all the revenue may come in or get recognized in this year. But the key thing is that this is a fairly unique project where we had to compete with the bigwigs in the industry. And this project has the potential of becoming a sample project for several other units of this large global organization. And we expect to see more of their global entities going in for similar solutions after this one is done. And by the way, this $500,000 is services.
Okay, sir. Thank you. Thank you so much, sir.
Thank you.
We take the next question from Arth Patel. Arth, you can unmute and ask. Arth Patel. We'll take the next question from Shashank Rastogi. Shashank, you can unmute and ask your question.
Yeah, hello, sir.
Hello, Shashank.
Sir, my question is that when are you expecting new growth drivers like AI agent, etc., to reflect in your growth number? Also, for increase in margin profile, are you planning to taper down India business and focus more on Europe and USA?
Well, we are not tapering down anything. Okay, that we have, opportunities in the Americas market, which we are working to leverage. It's also a market that gives us better margins on services, but it's not that we are tapering down on this. So that's the answer to your question number one. Your other question was about when do we see these agents starting to contribute, or these AI solutions starting to contribute to our revenue. So, this answer to this question is in two parts. The first part is that this is a change which is even necessary for organizations like us to survive. If we don't do this, we will die because somebody else will. And the second part of it is, which means that if you look at our revenue components, some of those components will start tilting towards building up of these agents and leveraging and enabling companies to leverage their data, which you feed into training these agents, which means that you might have reduction in some of the typical, let me say, customization or software development type of activities. Some of that revenue may get shifted. But the point is that all of these things together are creating more opportunities. And the reason that we are investing significantly on this is that in a couple of quarters, we will become a distinct leader in this space for our segment and for our segment of solution providers. So it is not only, I would say, and it's not only an advantage, it is also a necessity.
Fair enough, sir. So my second question is that since we have a substantial cash as well in our balance sheet, are we planning to, buy any kind of a startup in AI, to build our portfolio in AI, which could help us in making our growth driver, basically?
So some of those things are work in progress. And when the timing is right and when something more concrete happens, we'll be happy to update you guys.
Okay. Thank you, sir.
Thank you.
Thank you. We'll take the next question from Rajesh Bhatt. Rajesh, you can unmute and ask.
Hi. Good afternoon, Mr. Mia.
Good afternoon.
Rajesh here. I had two questions. The first one is, what's your current order book and what's your book-to-bill ratio? I couldn't find that in any of your presentations. I don't know if you formally track that. Just wanted to know order book and book-to-bill ratio.
So we really do not track the order book in the same way in which, let's say, a pure SaaS product company would do, or in the way a BPO company would do, because the nature of our business is not, we don't sign multi-year contracts. So if you go to a BPO, KPO, they would probably have contracts which are 10 years, for example. And that makes it, really feasible for them to really compute their order book and so on. All that I can say is we look at the velocity of our business based on the pipeline that we have. And the projects, when we engage in those projects, they each project would have, it kind of comes to a completion in a matter of 6 to 9 months before something else happens. So this is the reason why we prefer reporting on our recurring and repeat business, which is an indication of what business we are getting from our existing customers. But many of them, when they are projects, we still have to compete for them. When these are products and licenses, they usually just happen.
Got it. Thank you. My second question, sir, is I think in Microsoft, you have established a name for yourself in a very niche area, which I think is a great business model. Are you also considering establishing other platforms, for example, SAP or Salesforce or Workday or any of these platforms which are growing quite fast as well?
Sure. So Rajesh, this was a great question to ask maybe 10 years back or 5 years back. But today, this question is significantly less relevant. And the reason I say so is the investment today needs to go into what is next. And the next is data engineering and AI. It doesn't really matter whether you are on one accounting platform or another accounting platform. You may be able to perform one function differently or more efficiently, right? But the fundamental change today is brought in by AI. And AI requires data pipelines to be built from their original sources to be fed into those. And businesses need to learn how to leverage AI, what solutions to build on AI. So that is a bigger opportunity. And that is where we are focused on. That is where our investments will go. We are not looking at whether we should add an SAP or a Salesforce or another ERP or CRM, because really it doesn't matter. It is not at all important today. Microsoft has maintained a significant momentum and it is leading both the AI race and also the business application space. So just having, because we are not just a distributor of commodities. We bring solutions to our partners. So that is the reason this is not as important for us.
Got it. Thank you. All the best.
Thank you.
Thank you. We'll take the next request from the chat window. Jalaj Manocha, I request you to unmute and ask your question.
Yeah, hope I'm audible.
Yes, Jalaj.
Yeah. Sir, I was just delving deep into the split across customers in the top 5, top 10 buckets. If I were to see that top 5 and top 10 customer bucket has grown sensibly on a YOY and a QOQ basis, but X of that bucket has degrown sharply. Could you throw some light what exactly is happening there?
Sorry, I missed your second part of the sentence.
Yes, so I was saying that if I were to look at the bucketing of the customers, and if I were to look beyond top 10, looks like there have been sharp decline in the top line growth. What would explain that? Is it intentional or some?
No, see, it's very simple. It's very simple. Last quarter, our customer add declined. This quarter, we had more customer adds, but those customers did not really add revenue so much. So I think it's just timing issue. There's nothing structural or any pattern in this.
So could you explain a little more? Maybe how does it make a transactional transactional issue?
Of course, I will. So for example, let's say you sign a $100,000 project. Now, when you sign a $100,000 project, you don't get that $100,000 in the quarter in which you have closed that contract, because you are not supplying some material. You are engaged in a project, and most of these professional fees are paid as you achieve milestones in your project. So if this project, for example, is going to run for 6 months, then you will have let's say only $25,000 billed in the quarter in which you close this account, maybe another 50,000 in the next quarter, and maybe the balance in the third quarter. And if you are adding less number of customers in a quarter, then obviously the number outside of your top 10 will look low or will not grow that much. The top customers are obviously the ones where the relationships have not only been multi-year but also multi-dimensional. There are customers who have moved into the top 5 and then moved out from that, and that's just seasonal based on what engagement is going on at a given point in time. But there is no pattern that you can really derive from this.
Understood. And sir, specifically on the Microsoft channel of sales and Microsoft otherwise, how should I understand that channel playing out right now? Because just doing a calculation onto, so US seems to be a little on a sequential basis taken a hit, and on a YOY basis also US as a geography, the growth is lower than the company average, if I were to just put it. So how should I understand that? Specifically, it has got to do specifically with with Microsoft as a sales channel or Microsoft as a client? Yeah.
Not at all. Not at all. See, any impact that you see, and you see what happens is there will be some churn. That's the nature of the business. So for example, if there is a customer, so we had a customer that has been, I'm just taking an example. So this customer had been with us for 7 years, or has been with us for 7 years. And last year, there was a transaction in which a private equity firm came and bought that customer. And when that happened, the private equity firm wanted to consolidate the operations of this customer into into an enterprise suite of solutions that they had been running for the various entities that were in the group. So they decided to make investments on that side, and they ramped down on what they were doing with us. So that's, for example, I mean, they are still a customer because they still need those solutions, but their new investments were going, on the new platform that the group which acquired them was working on. And on this side, it started reducing. So this is an example of what happens. And then there will always be situations where you implement a solution, the customer stabilizes on that solution, and his need for support starts to come down before he has to make a new investment. And this is the reason, and somebody had asked me, why don't we do SAP and so on? The more important thing for us is that are we ready for the next that the customer needs? So if a customer has done an ERP now, and his next is AI, not just the AI which is embedded in the ERP solution, but let's say something else. So we are investing in being ready for that next, rather than another ERP or a CRM solution. So some of these things are just natural timing. Either solutions stabilize and the need for support comes down, or in case of the first example I took, a transaction happening and some changes happening at the organization level. But those are the only type of things which have happened. There is absolutely nothing that you see, you would say, structurally changing from Microsoft side.
Understood. Fine, sir. Thank you. I'll get back.
Thank you.
Thank you. We'll take the next question from Ganesh Kumar. Ganesh, you can unmute and ask.
Am I audible, sir?
Yes, Ganesh.
Okay. Sir, AI, Gen AI has been, its popularity has been exploding a lot since the last year or so. So have you encountered situation internally, either through customer feedback or through a market research or even internal analysis, where aspects of your product you had to work differently as compared to a pre-Gen AI world?
So very clearly, I mean, I would say the one fundamental change there is, for example, I take the case of an ERP implementation project. Now, thus far, when you talk of an ERP implementation project, you are typically looking at how to automate processes, how to make them more efficient. But now, with the advent of AI and customers wanting to do more with AI, increasingly one of the first things that we look at, even before we start thinking of how to tailor the processes, we are looking at that which parts of the organization can be automated by using agents. So you may first bring in agents to automate a set of things and then look at that now what else need, what other processes need to be automated, through ERP. So this is a very, very fundamental change. It has not really, I would say, fully unleashed the implications that it has, but this is going to be very significant in the coming times. Rajiv, you want to add something here?
Yes, I want to add 2 points. That one, what has changed in the last 1 year? We also recently did a survey with all our existing customers, and everybody is keen on AI. Everybody wants to discover the use cases. Secondly, what we are also observing now is that previously, if the requirements that were floated by the customer, they were primarily related to ERP or business applications. But now, in their requirement, also they are specifying the areas where they like the AI to be, present. So they are becoming much more aware. But this all thing, everybody is on a learning curve right now. But the acceptance that AI is now going to be embedded in the business processes is very much even in the SMB segment. So every entrepreneur today is aware that they have to, embed the AI in their processes, and everybody is searching for the best use cases to begin with. So they have a success story and not a, failure to begin with. So that is the biggest change that has happened in last 1 year.
Just one more question from me, sir.
Yeah.
So beyond the hype that AI has generated, and everybody is kind of asking, hey, have you got AI, Gen AI embedded in your systems and all that, whether it is valid or not. So have you come across use cases in your system, in your artifacts, or in what you deliver that could existentially be risky with AI getting more mature, and in turn affecting our future revenue or future prospects? I just want
I
to
think,
answer.
yeah. So I think, to the best of our experience thus far, all the cases where customers are, asking us to embed the AI agents and other areas. So one, we are using everything through the Microsoft stack. So Microsoft does provide this security feature that whatever data we bring in is not utilized by the models for their training, which is a big differentiator. So enterprise point of view, their data is not getting uploaded to the general LLM models. And from the misuse of AI, if the risk and, whatever risk could be there. So I think that is something which there are no empirical evidence as of now. There can only be, at least at the businesses level. So that is what we have not, and it is not going to impact our revenue streams. I also like to clarify one more point, which is whatever is the business as usual for us, that is going steady. So, the ERPs will still be sold, services are still there, and whatever product and licenses we were selling will still be sold. On top of it, there is going to be an additional revenue stream of the co-pilots and agents. So it's going to be the incremental revenue. And the services that we'll offer, obviously, we expect that the AI-related services will also command a premium. But these monetization models, once we are through the phase of POCs with the customers, we have the relevant case studies. I think there the model will mature more and we'll have much more clarity that what is the overall incremental revenue that we expect in the quarters and years to come.
Thank you, sir.
Thank you. We'll take the next question from Amrit Sittu. Amrit, you can unmute and ask.
My questions are almost answered, but I would like to again request a little bit of information on this. That given that there's uncertainty in the market and due to tariffs, etc., IT spending is generally cut down by the customers. So, particularly for this year, are we looking to basically tap into repeat business, especially with the AI angle, or are we basically focusing on acquiring new customers? Just considering because figuring out a new technology partner when times are uncertain might be a little bit of a difficulty, and this is just hypothesis from my side. Thank you.
So Amrit, it's not an either or. We have different teams working on acquiring new customers, and then we have teams who are working with these existing customers and trying to get more. So it's not an either or. There might be some, decision making may get prolonged, which is understandable. So it's not, we by design are not trying to tilt on one side or the other. It's very important for us to keep maintaining the momentum. So we will always keep looking for new business, and we will also keep looking for more opportunities with the same customers.
Thank you.
Thank you. We'll take the next question from Sandesh Kumar. Sandesh.
Yeah, hi sir.
Hello.
Sir, historically we have grown at 20% CAGR. Even last year also we had grown at 20%. Like, how much growth we can expect this year?
So I think, to be fair, it's a little bit hard to say. That's we take internal targets to grow around that. Whether that actually happens or whether that gets moderated a little bit, it's a little bit early. There are initiatives, some of them may click, and we may be close to that number. But I think for me to put a number there and say this is what will happen would be a little bit unreasonable.
Okay, so my second question, like, in spite of adding like new customers, like, why there is a degrowth or little growth? Why? Did we lost any customers?
So we addressed this point, a couple of questions back. You have to see that every customer that you acquire, our customers, for example, if they engage us for implementing an ERP, it's being done as a project. At some point in time, this project will end, and the customer will move into a support mode. At some point in time, he may have a new project coming in, and then we will have a new implementation. But this is not the model where you give X number of people to an organization and bill them at a rate of Y, and you have a consistent flow of X into Y. It may be a very nice model, from an arithmetic point of view, but that can also be a very risky model because you are not connected with the end customer. In our case, we are connected with the end customer. We are making an impact to his business directly, rather than having dependency on another large company who would subcontract some of their work to us by taking some of our people. So it's a different business model. And in this business model, some of these variations are very, very inherent.
Okay, sir. So my last question, like earlier we gave guidance of around like 1,000 crore revenue, maybe by 2030. Like, how we are planning to achieve this? Like, any new segment of revenue or inorganic growth to scale up this revenue?
Yeah, so all of that. So there isn't any one thing. There is organic and there is inorganic, and there are new segments getting added. Who would have said 5 years back that AI will play such a big role, or even 3 years back, or even 2 years back? Who would have said that AI will play such a big role in what organizations are doing and what companies like us will do? So we are actually, and if you look at all the technology curves, we are currently sitting, at a segment of that curve where things are changing very rapidly. Anybody trying to forecast or predict what will happen in the next 6 months, may be saying something too early or too late. So that's hard to say. This is a very, very rapidly changing space. We just have to make sure that we keep running.
Okay, sir. That's it from my side. Thank you.
Thank you.
Thank you. We'll take the next question from Piyush Vats. Piyush, you can unmute and ask.
Yeah. Hi, sir. Congratulations on the organization completing 25 years.
Thank you, Piyush.
So my question is a bit more on the product side. So you've mentioned in the earlier con calls that domestically we compete against the big four firms, and overseas in the US there are few firms. You mentioned some names. So in India specifically, are there any smaller firms that are basically leveraging the Microsoft tech stack and creating these products that we compete with, basically?
Clearly, I mean, Rajiv, you want to take that?
Yeah, there are certain partners who leverage Microsoft tech stack. They are also kind of creating products, solutions which they offer in the market. But I can also tell you that by far we are the prominent and number one partner for Microsoft, and from the overall sales and you know number of customer ads point of view. But there are other partners. It is not that we are the only ones.
Okay, sir. And just one more follow up on that. Are we planning to roll out any new products?
You mean
This
any new vertical solution kind of a thing?
Right, sir. Right.
So right now we have matured another solution which is currently we have done the POC in the sense that it has gone live with one of the customers that we are working on. So this is again for the industrial goods, where how they could do the quotation for the industrial goods. CPQ is the area. And besides that, as Ajay has mentioned in his presentation also, our existing solutions, we are also modernizing them and bringing the complete agentic AI layer in these solutions. So we kind of will be releasing the version 2.0 for all of these solutions in the quarters to come. So we'll be implementing, kind of upgrading it with their existing customers, and obviously there will be, new customer acquisition.
All right. That's it from my side. Thank you, sir.
Thank you.
Thank you. We take the next question from Agam Shah. Agam, you can unmute and ask.
Yeah. Am I audible?
Yes, Agam.
Yeah. Thanks for the opportunity. So most of my questions are answered. So again, coming back to the growth, so I mean, you already expanded the growth has been slow because in terms of customer addition being last quarter a little low and the payments being on milestone base. So broad culture, if you can, broad environment, if you can explain the demand environment, how it has been, and how the things are looking like going ahead. I mean, are we back on terms of, growing? I'm not putting a number to it, let's say 15-20% growth, but are we, the customer addition for this quarter has been good. So are we there in terms of growth, and how is the demand scenario?
You see, I had a slide which where we spoke of the growth drivers in this quarter. So clearly, there have been some new, growth drivers, and maybe Ritu wants to talk a little bit about that. Ritu has had, she looks after now the operation that we have set up in UAE with a new sales manager there, and also with a new sales person in Africa. So we see good momentum here. She has also been engaged with our other customers. If you look at from the overall health of the business, I started by saying that the growth seems to have moderated, but these numbers do not necessarily convey the health of the business, because internally we are very busy. The amount of pre-sales engagement that we are undertaking today, and both Ritu and Rajiv are undertaking today, are more than they have been in the last several quarters. So that momentum continues, and we have no doubt that we will be able to build on this in the next couple of quarters. Ritu, you want to add something there?
Yeah, I think a couple of points I just want to add. So one is, since the growth drivers, so we are also focusing on the rising industries in these geographies. So, for example, in Africa, we see a lot of potential and growth in banking and financial services. So, that has become a key growth driver in that region. And then at the same time, the new products that Microsoft has launched, for example, for customer service, contact center. So, that is something that we are leveraging to gain momentum in the specific industries. Likewise, in the UAE as well, we are focusing on the industries that are gaining momentum there. So these are the growth drivers which are definitely going to bring results in the next couple of quarters.
Okay, and in terms of inorganic acquisition?
So, as I said, this is work in progress. Saying anything on this, is always premature unless the ink has hit the paper. So when something happens, of course, we will let everyone know.
Thank you. We'll take the next question from Sid. Sid, you can unmute and ask the question.
Good afternoon, sir.
Good afternoon.
Sir, I have two questions. So first of all, in the last quarter, we mentioned that we are working on cybersecurity, acquiring capabilities to do that. How far we are, and have we actually started a project, or did we work on the cybersecurity for any existing customer or a new customer?
Yes, Sandeep, you want to take that? You are
I
on.
would like to take that. We have made quite a progress in that. We have identified some of the resources, as well as we have completed a couple of projects. These were predominantly into the areas of SOC, which is Microsoft-led solutions called SIM, Sentinel from Microsoft. We did it for one of the banks. Apart from that, there were a couple of projects that we did for a couple of companies that were predominantly towards the device management and application management, which were, again, it was focused towards Microsoft technology. That's called EMS that we completed last quarter.
That's great. And how do you see that scaling up? Do you see a lot of traction and that?
Yeah, I think there's a huge potential in the security perspective. We're talking about some of the solutions that we are bringing to our customers in terms of API security, in terms of the application security portfolios, and wherein most of the companies are now going in the SaaS model. So we are seeing potential pull in those areas.
So one thing that I would like to add here is that our play in this area is going to be a little bit different from the play that you would probably see from a typical company here in India. If you look at the Indian security market, probably 90% of the revenue of these companies is driven by selling the products. And there is probably 10% of consulting. And when they are selling the product, it becomes a very, I would say, close finish, because distributors would want to throw in margins and they would want to throw in discounts and so on. We don't want to compete in that business. We don't want to spend our sales and delivery effort in that business. So while we will continue to work for our customers, but we are trying to twist this and bring the security solutions and consulting to our international customers. This is nascent right now. This will take some time, but this will keep building surely. And this is also an area where our offerings are not going to be limited only to Microsoft. There will be other offerings that will go along with it. Our existing customers in India will keep we'll keep looking for their needs. And then we will also leverage our other sales network internationally to bring this to our international opportunities.
Got it. Thanks. Just another question. So you mentioned that we are doing billing for the consultancy part. We are doing billing per hour. Do you see any changes in the industry where in the future, maybe 2 or 3 quarters down the line, the billing might be milestone basis. So let's say if a client engages with you, they say you have this much amount, and just consult us and just let us know what are the best things that you can offer, or will it still, do you see it still being per hour basis?
So it's all the time. This is how the model has always been. So when you talk of the overall fee, the fee is a component of, first of all, making an assessment of how many hours will an activity take. You know, budgeting for any contingencies and so on. And then you want to also figure out that, well, how much billing you want. And that's how you put it, you know, based on geography and based on the competitive situations there, you decide on a rate that you want to work with. And that's how you come to your professional services fee. And sometimes this is also dependent, not sometimes, but all the time, it is also dependent not just on how much effort you are putting in, but also how much is a customer gaining from this. So pricing is always a critical thing. And we keep looking at it closely based on the nature of the solution being delivered, based on the geography of the customer, based on our engagement in that. A lot of projects are built on a milestone basis. And that's the very nature of project-based businesses. There are customers, particularly in some regions, who definitely want to go milestone. So for example, if we are following agile methodology, we want to bill for every sprint completed. So that is also, you know, if a sprint is a monthly sprint, then we will bill monthly, but the customer has an outcome of the sprint at which he pays. So it's a combination of these factors.
Got it. That makes it very clear. I wish you and the company all the best and great future ahead. Thank you.
Thank you very much.
Thank you. We'll take the next question from Miten Shah. Then you can.
Yeah, thank you for giving me opportunity, and congratulations once again for completing 25 years.
Thank you very much, Miten.
Yeah. So my question comes back to the same question which I had asked in the last con call actually. Now, since we have completed, almost 25 years, it's a great feat, absolutely, because to survive in any industry, we know it's a competitive industry everywhere, basically, whatever B sector it is. But my only question is, and I have absolutely great, I feel very proud when I see this management, the entire management, they're absolutely so transparent, so honest, and so dynamic. But the only thing, what really disappoints me is the same question which I asked last time. After having completed 25 years, we are still sitting at TED 150 crores of revenue, a TED below 150 crores of revenue. No, which actually disappoints me. Although I can see a lot of improvement in the margins, year on year. When can we see the needle moving, in terms of revenue? Because we had projected, say, something around 1,000 crore revenue by 2030. It looks a very daunting task to me, in the next 5 years, almost scaling 8 to 10 times from here. So how, can this be manifested? Or, I don't know. I just wanted to ask that actually. So what are the plans basically?
So your point is right, and your questions are right. Okay. Now, whether that date is 2030 or it is 2032 or 2034 is not the point. The point is that when you set a goal, the goal needs to be audacious enough. There's no point of setting up something which is like trivial. There is also a corresponding question which people ask, that why is it that you have grown in the last, let's say, 3 years, but not in the past 23 years or 22 years, right? So, all of these things and all of these questions are valid. We can ask the same question to say that why did, for example, India experience a good growth in the last 10 years, but not in the past, so many years. So I think I have tried to answer this. Sometimes some things change fundamentally. Of course, we learn, but I would say in our case, COVID happening brought in a couple of fundamental changes. The first change that COVID brought in was it taught people worldwide that it was feasible to get consulting type of work done remotely. and you could get the same quality as you would get from somebody providing the services from across the street, because the method of working is the same. Now, this was a very fundamental shift. We have never been, and that's the character, good or bad, but we have not been a company who has had a business model of providing resources to other companies. You know, I started my career working in that kind of an environment, but at Alletec, we have never done that. We have always focused on outcomes to the customers, and therefore looking at mid and upper mid-sized businesses to see what is it that this business requires, and then we put ourselves at task of delivering those outcomes to the customer. Had our business been in providing a certain headcount, obviously that business can be multiplied when the economy does well. People need more people, you know, businesses need more people or more headcount. You recruit and you give people, and you can keep increasing, you know, your relations build, and it can be a great business. It's just that, you know, that's not the business that we are in. It's not to say that it's a bad business, but, you know, we are not in that business. So the business that we are in, you know, is very consulting led. We pride ourselves with the impact that we bring to our customers. We feel very badly if something that we have taken up to do has not brought in desired outcomes, and then we apply ourselves to make sure that the outcomes become what they ought to be. In the process, you are right, we did not grow as one would have expected a typical Indian IT company to grow. But then post-COVID, and that's not 2020, that's more like, you know, 2 years later, because the world started waking up to the reality that we are finally going to be alive and not dying. And then the businesses started changing. So that brought in a fundamental change. And with that was our push to increase our business internationally. So these things have come together. And that is what has seen the growth. And then there will be more things which will change. You know, you can't really draw a graph today to look at the trajectory that we will have over the next, let's say, 8 years or 10 years, because there will be, you know, periods in between which will see a delta shift in that trajectory.
Noted, noted. I really appreciate. Also, one more thing, you know, as we just alluded that we start within the last con call, and we also discussed in this con call regarding the you know, starting of new vertical related to cyber security solutions. So, is there a possibility, you know, to include this in a presentation going forward? I mean, how much does it contribute? You know, probably I know it will be very, very minuscule as of now, you know, but how has it shaped up? I mean, the way we thought it, you know, to start and getting it accelerated, has it gone in that fashion as we would have thought? So that would just give us an idea.
Sure,
yeah.
I will. So we will start doing that, but I think it probably would be more meaningful to do that towards the end of this year. As I said, this is a nascent practice. We are not in the rat race of pushing boxes and products at you know, zero margins to customers just to add up revenue. We will work on opportunities which bring you know, reasonable margins as well, and add value to our customer set. But these numbers should start becoming more meaningful, I think, in a couple of quarters, and we will be happy to start reporting it.
Sure. And just last only, I mean, concluding to this, are there any margin difference between this vertical and the normal vertical that we have? I mean, what is the margin difference?
I would say that, yeah. So I would say that when it comes to the services side, there isn't really much difference. When it comes to the product side, you know, first of all, the percentage of the product in this business typically is higher than it is in, for example, an ERP project. And in this, the margins could even be lower. But on the consulting side, the margins would not be any different.
All right, all right. Yeah, that's it. That's it. Thanks a lot once again. And as I said, I'm really proud to be associated with the company and with the top very transparent management.
Thank you very much.
Thanks a lot. Really appreciate.
Thank you.
Thank you. We'll take the next question from Jaya Kumar. Jaya Kumar, you can unmute now.
So this is Jay Kumar from Neyveli, Tamil Nadu, extreme place. I am associated with your company for the last 2 years or since you are listed, and I am very proud to say that I have gained very much from your company through this your listings. And I want to have some commercial clarification. I don't know whether you are eligible to, whether you are empowered to commit that. When I go through your some 6 or 7 latest quarters report, almost I see in particular quarters, especially we just take the immediate previous quarter, you are having a profit margin of some amount, and this particular quarter that profit margin is almost 30 to 40% lower than that. Whether that same pattern will be continuing for the coming years also, what is the business cycle, why it is repeated often in particular month, especially in all IT companies, that is applicable to you also, especially in first quarter, the report that margin range is little low.
You're looking at margin or you're looking at the product purchase price?
Net profit, net profit. I mean net profit.
Oh, net profit for the whole business.
Yes, yes, yes.
Okay. As I said, first of all, the right comparison would be Q1 to Q1 of last year. And if you would see that, the percentages are roughly the same. As I had mentioned previously, that Q4 typically sees some adjustments, and these adjustments could be on account of the Forex rate fluctuation. This could also be on account of some provisioning of expenses that we might have done in earlier quarters. And if all of that doesn't happen, then that gets added back in the quarter 4. So those are basically the things. There is nothing fundamental, I would say, that changes.
Okay, then I can take it that it's a routine thing. Every quarter it will be a cyclic thing, and nothing. We need not worry about that particular downside result in a particular quarter. Okay, that's what I can perceive, isn't it?
Absolutely, absolutely. And there will be some quarters, for example, if we have a large project win and which requires, which involves some significant product purchase and so on. So there will be some ups and downs, but this is broadly the range. And typically these adjustments would, possibly pip the last quarter a little bit.
Okay, okay. As of now, I am pinning high hopes on your firm based on your recent con calls and based on your actual real outputs in your balance sheet. And I think last time you have declared a dividend also ₹1.50. And me and my group are pinning high hopes, and we are entering in a little large way also. Based on your latest performance, I want to thank you, sir. Thank you. Thank you.
Thank you very much, Jai Kumar. Thanks for your kind words. And all that we can say is that, whatever happens, all of us continue to strive to build the organization. Money is important, profits are important, revenue is important, but also important is the satisfaction of our customers. Also important is how good our colleagues feel within the organization. All of these things together build an organization. Actually, and that is what we try to work towards.
Actually, I'm following your data for the last 1.5 years. In fact, without going through your, I just went through your last con call only. After going through your data for the last 7 or 8 quarters, I got some more confidence on your particular company. And especially people hesitate to enter the small caps and micro caps, and we are buying on these lots and all. But even then, I had that confidence, and in fact, I'm not a techie, I'm not a IT person. I'm basically a chemical engineer, I'm a retired person. Then I consulted with my few friends, and after going through your records, and I'm pinning hopes. Only doubt is that quarter to quarter, sometimes some huge variation is there, and that now you clarified. Let us hope for the best. Thank you very much, sir. Thank you. Thank you.
Thank you very much, Mr. Jai Kumar.
Thank you. We'll take the first follow-up question from Jalaj Manocha.
Yeah, thanks for the opportunity. Ajay sir, if I were just to break down the revenue, I just wanted to have a view around what would be the pure play consulting revenue as a percentage of top line. And I'm just trying to understand how has that moved during the last 2-3 years, both things.
So our product versus consulting typically stays in the range of product being somewhere between 42 to 45%, and the balance being services. So you will see some quarters where the product is 42 and services are 58. In this particular quarter, the product has been 45.6 something, and services has been the balance.
And while you are saying services, there would be both consulting and implementation part, I'm assuming.
Yes.
So do we internally even capture separately consulting, pure play consulting as a line, as a head separately? Do we do that?
Yeah,
If you could tell
we
me.
don't.
Yeah.
So let me say we don't. And the reason that we don't is that we can't execute any project without it being front-ended by a consulting piece. So when you start an engagement, for example, even to implement an ERP, the first thing that you do is to do the solutioning. You understand the business, you make an architecture, you do solutioning. Now, this is all consulting. We don't bill it separately. It's all part of the project cost, but it's a definitely a separate activity, which is more aligned to consulting rather than just so when we talk of implementation, and different people understand different things from when we say implementation, but implementation could be something like bring in a product, install the product, configure the product, train the people, bring the data, and done. But we cannot do all of this before we have a consulting piece, heading all of this.
Understood. And this proportion has been during the past 2-3 years has been in a similar range of 45 to 60, 30, 55 sorts of.
Yes, if you see all our decks which are available at NSE and on our website, the product stays in the range of 42 to 45% of the revenue.
Understood. Thank you.
Thank you.
Thank you. We'll take the next set of follow-up questions from Vikas Badania. Vikas, you can unmute.
Hello, sir.
Hi, Vikas.
Sir, yeah, we have now a team of around 360 people.
Mm-hmm.
Sir, what is your approach to attracting and retaining talent, especially with specialized AI and technology skill in high demand?
Well, the most important thing in attracting talent is to do good work. And good work is, when you're doing work which is impacting customers, when you're doing work which is helping customers perform their businesses better, that brings benefit not just to the customer, it also brings a significant learning to us. For people in our industry, one of the most important things is, are we learning enough? Are we doing good work? So this is one thing. The second thing, of course, is that we look at the various aspects of what makes this a good place to work. And we have been for the last 3 years conducting this survey, and all these years, we were qualified for a great place to work, which is kind of an indicative of how people feel. But your question is, pretty much on the spot. Getting high caliber people and keeping them is a constant challenge. You cannot take it for granted. There is no shortcut to it. You have to keep working at it. And all of us have recently seen the news from Mark Zuckerberg, who has offered people $100 million. And in one case, in case of Meera Murati, he even offered her $1 billion and was not able to bring her in. So these are not easy questions. It's something that we have to work on constantly. And, within the management team, Ritu in particular, looks very closely after the HR function, the corporate HR function. And Rajiv keeps working in making innovations and building new products so that we stay, at the front of the partner ecosystem. Ultimately, everybody wants to be with a winning team. And so we try to be a winner.
Yes, sir. Thank you, sir. Thank you.
Thank you.
Thank you. We'll take the last set of follow-up questions from Rohan Mehta. Rohan.
Hello, sir. Thank you so much for the opportunity again. So, at the start, sir, you spoke at length about how Microsoft is leading with AI now. I also wanted to understand that, given that, Microsoft itself is growing quite high, is it possible for us to grow at 30% revenue CAGR over the next 3 years? Is that a realistic target in your opinion?
See, Microsoft is growing in various ways. I think if you look at their specific business lines, let's say you look at Dynamics 365, it has grown at around 23%. If you look at the company-wide year on year, I think it grew by a little over 15%. But the question is that the specific areas that the cloud grew significantly. So whether a 30% growth is possible, I see possible for sure, because we enter new markets, we enter new solution areas, we are entering AI. One way, for example, and this is important, one way in which Microsoft is able to often grow its revenues is by increasing price. Now, that is not always a luxury that we may have available. But overall, if you see, because the whole ecosystem is growing and because the products that we have put our bets on, they are growing and Microsoft is doing well, it augurs well for, in a couple of quarters. So it will be purely theoretical exercise for me to say whether, we can grow 30 or 15 or 20 or 25. I think there is a lot of things are happening right now. The solution areas are changing, customer needs are changing, AI is changing things dramatically. The political scenario is changing, the global wars are having their own thing. So, all of this thing is in such a mix that it's very hard for anyone to kind of put all of those variables in one equation and say that where will the next dot be? We just have to stay agile, keep looking at it and working on that basis.
I'd just like to add 2 cents here. So Rohan, what you'll see from Microsoft perspective, one thing which is very clear is that from a hype stage, what they have proven is that at least in the enterprise space, the consumption and adoption of co-pilots has increased significantly, which is where they've seen the monetary growth as well. Now, what we need to see is when the enterprise adoption has increased, it is going to trickle down to the supply chain and to the SME market as well, which is where, there is always that impact that there are leaders in the industry who adopt a solution and then the entire supply chain kind of follows it, the same trend. So which is what the space, the sweet spot where we are serving, there also we feel that this trickle down impact has to come in the next few quarters, which will be where we'll be gaining out of it. So that definitely is going to happen because the proof of point has come by the results declared by Microsoft.
Thank you. Thank you so much for the clarification. And secondly, my last question is on the deal flow. How is it shaping out for Q2 currently? How do you see things at the moment?
So, as we mentioned, we have seen no reduction in demand. Ritu and Rajiv are more busy than before with their pre-sales opportunities. How many of them actually get converted in Q2? How many of them, slip into Q3? That's always hard to say because these engagements they take several months. But overall, people stay busy. We are talking to customers. The whole sales and marketing team is pretty busy and agile. And I think we should be doing well.
Okay, sir. Thank you.
Thank you very much.
Thank you. Since that was the last question, do you have any closing comments, sir?
Well, I think I said everything that we possibly would have wanted to say. Just thank you everyone for joining this afternoon. Happy to share our thoughts and happy to share what's happening on our side. We'll be always updating you wherever something of substance happens again. Thank you very much.
Thank you, sir. Thank you to all the participants for joining the call, and thank you to the management for your valuable time. You may all disconnect now.
Thank you.